Hello everyone, hope you're doing well. Just wanted to make a quick clip this Sunday evening about the latest on the US stock market and the impact of tariffs. Now, before I proceed, just a quick note. I'm a licensed registered financial advisor with Blue Eris, and this content is for educational purposes only. Now, let's get back to our topic. So, this clip is going to be a continuation from the last two videos I made, which you can watch about March Madness. Right now, we are in April, and the first week of April has just been incredibly volatile in the US stock market. So, as you may have seen, and I don't need to repeat this, that the markets after the president announced tariffs on Wednesday after the market closed just tumbled, and that was very unexpected. It surprised a lot of people, including me, and whenever there are surprises, that's what happens in the market. Now, we knew that the valuations were quite high for US market, but Wednesday, once the tariffs were announced, you could see that the confidence broke and the markets tanked on Thursday morning viciously. And then on Friday, once China announced retaliatory tariffs of 35% on US goods, the markets extended the losses. Now, as of Sunday this evening, in after-hour trading, the US market is still looking for an ugly Monday morning opening, with Dow, I think it was down almost 3% or so after hours. Now, I don't know how long this correction will last, whether this is a start of a new bear market. After all, we have been in a bull market since March of 2009. The S&P 500 has gained almost 600% since then. Anyway, it's futile to predict how low the markets will go. But what I can share, there are a few factors that are in play. Number one, the valuations of this market was already quite high. The US market became 75% of the total world market, which is very high. In addition, there was overexuberance in Magnificent Seven stocks. Another indicator that I watch is Mr. Warren Buffett, who had raised a lot of cash since last year, since he couldn't find any value in the market. The second factor is a man-made. This basically the tariffs imposed by this current administration. Now, tariffs wars have never turned out to be good. In past tariff wars, famously known by Smoot-Hawley tariffs, were one of the factors to start the Great Depression. Now, I'm not sure if this will happen or not here, but another important factor is that in past crises, especially 2008 and 2020, the government intervened and helped out the markets. But this time, the administration has already said they don't mind if there will be a recession. So I'm not sure if the administration will pull back on the imposed tariffs, but so far there is no indication of it. Now, one sliver of hope is the Federal Reserve, which may lower interest rates to boost confidence as well as growth if unemployment spikes. But if inflation starts to rise because of the tariffs, then I'm not sure what they will do because lower rates may increase inflation. So they have a challenge on hand. So what should you do? Well, if you are close to retirement, then be risk averse. Be very risk averse. If you don't know how, then reach out to us. We can help. If you're young, then be diversified, but stay in the market. It's said that time in the market is more important than timing the market, provided you have good assets. Now, the markets don't go down or up in a straight line, though bear markets always feel like a fast ride down the elevator. The markets may find a bottom this week and may rally temporarily, but this is just my speculation. First quarter earnings are also going to be coming in, I believe, this week. Anyway, that's all. If you have any questions, feel free to leave a comment and I will be happy to respond. You can also contact me through my website. The link is in my bio. And thank you very much for listening. And don't forget to like and subscribe if you like the content. And again, thanks a lot.